In 2007, Daniel Chu launched Tricolor Auto with a mission that sounded both noble and lucrative, providing car loans to the millions of Hispanic and immigrant families across the American Southwest who were ignored by traditional banks. For nearly 2 decades, Chu was hailed as a visionary, turning a community-focused buy here, pay here model into a financial giant. By 2024, Tricolor was reporting over $1 billion in annual revenue, operating 65 dealerships, and managing 60,000 active loans. But while Chu was being celebrated in boardrooms and even serving on the boards of the very banks he did business with, he was quietly orchestrating a billion-dollar criminal enterprise. The fraud was systematic and brutal. At its core was a deceptive practice known as double pledging. Chu directed his top executives to use the same portfolios of auto loans as collateral for separate credit lines with different banks. In the complex world of high finance, he was essentially promising the same dollar to multiple lenders at the same time. But he didn't stop there. To keep the cash flowing, Chu allegedly falsified loan data, making thousands of near-worthless, delinquent loans appear as healthy, performing assets. He even went as far as creating ghost vehicles in the records, listing cars that didn't exist as collateral to secure hundreds of millions in fresh cash. By the summer of 2025, the house of cards began to tremble. Major lenders like J.P. Morgan Chase and Fifth Third Bank noticed discrepancies and confronted Chu. In secretly recorded phone calls that would later become the backbone of the FBI's case, Chu didn't panic. He strategized. He proposed using artificial intelligence tools to scrub company records and concocted a plan to blame the discrepancies on fictitious deferment policies. In a moment of chilling self-awareness, he compared the situation to the infamous Enron scandal, acknowledging that his empire was basically history. But as the company spiraled toward disaster, Chu's priorities shifted from saving his business to enriching himself. In late August 2025, while knowing the company was definitely insolvent, he directed his CFO to pay him the final installments of a $15 million bonus. Just 3 weeks before Tricolor placed more than 1,000 employees on unpaid leave and locked the doors of its 65 dealerships, Chu received over $6 million. He immediately used the funds to purchase a multi-million-dollar mansion in Beverly Hills. The end was swift and total. On September 10, 2025, Tricolor filed for Chapter 7 bankruptcy, signaling a total liquidation that left banks with nearly $1 billion in losses and stranded thousands of low-income car buyers. On December 17th, federal agents finally closed in, arresting Daniel Chu in Florida, charged with bank fraud, wire fraud, and running a continuing financial crimes enterprise. The man who claimed to build a future for the underserved now faces a potential sentence of life in prison. It is a staggering fall for a man who left behind nothing but a graveyard of debt and broken trust. Follow and subscribe for more law and crime episodes.